Hi, welcome to today's session on the consumer is interested, now what? How to optimize the point of contact and application. My name is Scott Rhinehart, and I'm a senior manager here at LexisNexis, overseeing the point of application for the life insurance industry. All the strategy and innovation and ways we can make things better for carriers, agents, and consumers. So our question today is, your consumer has raised their hand. Now what? Well, our goal should be a consumer-centric experience. And when I stop and think about this for a moment, there are really four key entities in our ecosystem today that play a role in this consumer-centric experience. The first, most obvious, is our agent friends. Secondly, carriers. Third, technology, software, e-app providers. And last, fourthly, data providers. We all have a role to play in driving a consumer-centric experience. We've also seen a digital transformation in the industry today. But we all also recognize that there's room for improvement. And when we look at everything we do, are we still continuing to put that consumer at the center of it all and really try and drive that experience for them? Well, here are some of the things that stand in the way from us really optimizing this consumer experience. And it's all about getting it right from the start. So these are our goals for really streamlining an optimal consumer-centric experience. The first is going to be increasing speed and efficiency. We've done very, very good things to drive and reduce cycle time in this industry, but we're still not placing a high percentage of policies within minutes. We can get better. There is a better standard out there. And I think, today I want to talk about how all four parties, when we're working together in unison, can drive this experience and really deliver on increasing speed and efficiency, as well as reducing blind spots for agents. So you guys have done a great job historically in the past, field underwriting your client, asking all of those medical questions that are important, and really looking at the landscape of available options for that client and placing them, making the best recommendation for them to place them with the best carrier, the best underwriting, best type of policy. It's going to be the best fit for that client. But with the advent of accelerated automated underwriting, that's really thrown a wrench into your field underwriting. You don't have a way to predict that, so to speak. So how do we reduce those blind spots for you so that you can better set the expectation and drive a consumer-centric experience? Thirdly is improving retention ratios. And you might think that this is a little odd coming this early in the game, but today in the market that we're under extreme inflationary pressures. We haven't seen inflation like this in 40 years. So when you do have a consumer that's interested in buying, you want to make sure that you are doing what is in the best interest of the consumer, you as an agent, you as a carrier, and keeping that consumer on the books for as long as possible. And then lastly is enabling instant decisioning. So getting rid of that disconnect and really shortening that cycle time between the application being collected and underwriting rendering a decision. And data is available today to render decision instantaneously at the point of sale. But again, all four parties, agents, carriers, technology companies, and data providers have a role to play in this. And I want to talk to you today about really two data platforms that LexisNexis has and how we play a role in this. But again, we can only do it in working with carriers, agents, and technology providers, showing how we can be one of the four cornerstones to delivering a consumer-centric experience. The first platform is our life data prefill solution. And here in the middle, you see kind of the standard solution itself. And we're going to talk a little bit more about how that base and core solution solves some of the problems that we worked with earlier. But again, we can't do it alone, right? It has to be working in tandem with both agents and the technology companies to be able to do this, as well as other tools that we've attached to this platform, such as an accelerated indicator to reduce those blind spots for our agent friends. A family history indicator to, again, further help make sure you are setting the right expectation. And then lastly, a persistency indicator to help begin to improve those retention ratios at the point of sale. So this is really the foundation from a data perspective to enable and help the industry get it right from the start. So let's unpack this a little bit. First, in kind of the core and base solution to a data package that can be delivered real time to an agent in the field are the data points you see here in blue. And we only need a name, address, and a date of birth to deliver these data points to the agent to confirm with the consumer in the field. And let's pick on a couple of these. Social security number and driver's license number. I don't think I need to stress the importance of these two data points in the underwriting and onboarding process. And on average, we see that a social security number is collected from an agent via the consumer. On average, it's collected in error about 6% of the time. And a driver's license number is collected in error about 12% of the time. So right here, you have a large percentage of the time that your data is being collected in error and you're getting things off on the wrong foot. What does this do? Data goes to underwriting, goes to the carrier gets a no hit, sends it back to the agent. You, the agent, then have to go back to the consumer, and it creates a lot of friction. Consumers going, I already gave you this information. Why do I have to give it to you again? And to further unpack that statistic on a driver's license number, agents are really missing an opportunity here to put more people through the process. Many of those errors result in no hits, but if you get that correct, then you're going to get a good, clean, oftentimes clean underwriting hit, and you're going to accelerate more people through the process. And you can do this all because one data point was correct versus being incorrect. And with 50 different state formats, alphanumerical characters for a driver's license number, it's very easy to get this wrong. But we can shore this up and ensure that the information being sent downstream to underwriting is right from the start. Additionally, you see things here like phone and email address or household members that can be used as likely beneficiaries. There is no better experience than when somebody does come forward at claim time and their information matches what was on the application. That makes for a truly seamless and great claims experience. Also delivering on that customer centric experience that is the theme of what we want to talk about today. Next is, how do we reduce those blind spots for the agent? So I talked a little bit earlier about how you guys do a great job field underwriting, but again, with accelerated underwriting, you now have a blind spot. You don't know which carrier is going to be the best accelerator for your client. You don't know what that accelerated automated underwriting platform, what decision that's going to render back. It could surprise you, and that's never a good, positive, customer-centric experience. So we built a tool that is a point of sale tool to be delivered with prefill, the prefill platform, to reduce that blind spot. And it's a very simplistic but highly directional tool for you agents to close this gap. So our accelerated indicator receives and brings forth 3 very basic data points for you. A high probability that your consumer is a good fit for accelerated underwriting. If so, you should have all the confidence in the world to place that consumer in an accelerated underwriting program and move forward. A medium indicator representing that this consumer is not necessarily a bad risk. They actually could very well be a good fit for an accelerated underwriting program. They just may have to do a few additional steps. They may be triaged out to an exam, for example, but you should still try and put them into an accelerated underwriting program. You should not be shocked with declines and adverse decisions with this group. And then thirdly is a low probability. So here, if somebody wants to go and do an accelerated underwriting program, fine. Let them know that they may not be the best fit and that you want to have a plan B available if they don't go through the accelerated underwriting program. And this is all about allowing the agents to set the right expectation up front, give you another tool in your toolkit to recommend the best carrier and the best policy. So now what this could look like is, again, everybody that gets a high indicator, confident to move them forward to any carrier that has an accelerated underwriting program. Medium, maybe those carriers that have a higher threshold of an accelerated underwriting program. And again, being able to set the right expectation. And then lastly, a low probability would be those carriers that aren't really offering an accelerated underwriting program, a more traditional underwriting program. So again, reducing that blind spots for the agents. Next is persistency model. So we talked earlier about retention, and with inflation, we're starting to see carriers come forward with retention being an issue, right? Maybe even there are going to be less buyers in the market because we all know that life insurance is purchased with disposable income. And so now you have the ability to receive an insight at the point of sale on that consumer. Is that consumer a high likelihood for an early lapse? If they are, does this change your conversation as an agent with that consumer? Are you now having an affordability discussion? So you've assessed the need. Maybe for an example, the need is $500,000 in life insurance, but instead of maybe $500,000 in a universal life or a 30-year term, maybe it's a 10-year term for affordability purposes to, again, ensure that this consumer will stay on the books long term. So again, having insight, as well as maybe also to help improve retention metrics, right? You're having a payment plan discussion, right? What's going to be the best payment plan for you to be able to pay your bills long term? And then also being able to narrow that target audience that you want to continue to stay engaged with from a retention program right from the start. And so this was our validation on this persistency indicator that we've put in as a point of sale insight. And what you see here is our ability to segment the consumer with the best consumers for retention falling in that lowest decile. You see here about a 2% lapse rate versus the highest risk consumers of lapse at an 18% risk of lapse in the highest decile there. So 9 times separation, but again, a very highly directional insight for you to understand who is a true risk of lapse. And this was performed over a dozen carriers that again have a lapse rate that is very common, very average, about 6.5% overall. So we feel like this is a very good representation of the market at large, and that you have a very good insight into who's going to be a possible candidate for early lapse. Lastly is the family history flag. And so here, another point of sale insight so that you are not receiving any surprise decisions, right? So here at the point of sale, if we know based on data that the consumer has a first degree parent or sibling who has passed prior to the age of 60, you can receive this insight and begin to ask those drill down questions on that family history, right? Further understand what was that cause of death. Was it from natural causes or accidental causes? That way, when one of the carriers at underwriting is pulling an electronic health record or an attending physician statement, they don't find something that was non-disclosed by the consumer, right? So again, you're uncovering this as part of that conversation early on to, again, help drive that consumer-centric experience and help get it right from the start. And on average, we actually see this happening about 9% overall in the industry. Next, I wanted to talk to you about enabling instant decisioning. So LexisNexis recently entered a partnership with ExamOne. And with our partnership with ExamOne, we are now able to render real-time data for both behavioral data and medical data, all the things that you would typically look at as a carrier at the point of underwriting. And we're able to package this together and get it to you, the carrier, in real time. So now we have a model that enables you to render real-time decisioning based on all the data that you're already very familiar with. And here's what it looks like. So public records, credit, driving behavior, prescription history, clinical lab data, and medical diagnosis, all rolled up into one highly predictive model where the outcome is greater than what it's made of, right? So it's really the 1 + 1 = 3. The sum is greater than its parts. And so what we have here is a model that has 13 times separation between the riskiest decile and the most preferred decile. You'll also notice that this outperforms a prescription-only based model. So again, really allowing carriers to go beyond just accelerating preferred and standard business. You really have the opportunity now to further and highly segment that business to render decisions table rated perhaps, but really, again, allow you to give an instant decision back based on data to the field to really optimize that consumer-centric experience. The consumer isn't waiting on an underwriting decision because you've got the data and you know what that risk is being presented from a mortality perspective and can price it accordingly. So we've talked about tools from a data perspective and how they interact with both a carrier and an agent, how they can complement the carrier's underwriting, how they can complement the discussion the agent is having in the field, discussions based on data, decisions based on data. But next is really taking a look back at where you're at today, right? So understanding where you're at in terms of data and technological sophistication. And this matters. This is really where all four parties, agents, carriers, technology companies, and data providers have a role to play in this to get to the most optimal level. First is our manual processes, right? So we do still see some paper applications. We also see some, what was really the next step up from a paper application to really account for legibility of a paper application, which is simply a digitized form of an electronic or of an application. It's electronic, but it's not connected. It's not online. From a carrier's perspective, on the right-hand side here, going up the vertical axis, what are you doing at underwriting? Do you still have a highly manual underwriting process, right? And so these are very time intensive. And it's not to say that you may not have the occasional case that requires this, but with the use of data and technology, we see the industry moving well beyond this. So we do see a lot of carriers and agents who are really at this level 3 and 4 stage. And so with level 3, you've now got an online interactive e-application. You can complete that application in the field and send it off to the carrier, send it off to home office to have it be underwritten. What is key here, though, is that it's disconnected from underwriting. So you are still waiting potentially days for the carrier to render an underwriting decision. That takes us to level 4. Level 4, you still have that same interactive e-application completed in the field, but now it is connected to that carrier's underwriting platform. And so if the carrier has that accelerated or automated underwriting platform and can enable instant decisioning, if the data is correct, then they can render that decision in real time. But you'll notice I said if the data is correct, because again, this is where the current hangup is with some of the more sophisticated users of technology. They don't have the data to really optimize the pass-through. So if a driver's license number, again, is incorrect, it's being kicked out. You haven't been able to necessarily identify at a carrier level any fraud, right? You haven't been able to have those conversations on affordability if you're an agent, right? So with the lack of data, you don't get to what is now level 5. And level 5 is really where, again, data comes in with technology and seamlessly works with agents and carriers to fully optimize this experience. And now you have data being pre-filled into your application that is accurate. It's going to ensure good, clean underwriting hits. You have insights as an agent to reduce blind spots and have affordability discussions. And carriers, you are optimizing the amount of policies that are being put through your accelerated underwriting program because the data coming in is good. And this is really what drives a consumer-centric experience. Data is good, you've set the right expectations, you've had the right conversations, and your consumer is wowed. So what are our next steps? What are our call to action? Again, we want to be that industry partner, be a cornerstone, the data provider that works with the technology companies out there, works with agents, works with carriers. So connect with us. We have a new case study that talks more in depth around some of these data points I've talked about today. We'd love to get that in your hands, along with our white papers for some of our underwriting solutions. Again, all to show how much this advances the cause of a consumer-centric experience. We're also happy to provide a demo of any of the things that you've seen here today, as well as perform benchmarking for you. Where does your data stack up compared to your peers? We can analyze that for you. So again, thank you very much for your time today, and we look forward to connecting with you and seeing you in person in November. Thank you very much.